Greetings, friends. Welcome to the Rotary Club of Cincinnati on the 8th day of September. It is another great day at Cincinnati Rotary. We have a special program today. Our very own Peter Baden is our speaker and program today. Welcome, Peter. It has been a whirlwind of a couple of days for you, Peter. I really appreciate him flying in on the 6:00-something flight this morning, landing at CVG just in time to get here for our meeting. Always thankful when the speaker shows up. So thank you, Peter. We're looking forward to hearing about your innovative new ideas on some of your investment programs and its connection to Rotary. Let's begin our meeting with the national anthem, led by Bob Branstetter and accompanied by Kay Atkins, followed by the invocation and four-way test from Hux Miller.
Oh, say, can you see by the dawn's early light what so proudly we hailed at the twilight's last gleaming, whose broad stripes and bright stars through the perilous fight o'er the ramparts we watch were so gallantly streaming, and the rocket's red glare, the bombs bursting in air, gave proof through the night that our flag was still there. Oh, say does that star-spangled banner yet wave o'er the land of the free and the home of the brave?
Let us pray. Dear Lord, you say that when two or three are gathered in your name, you also are here. Help us to feel your presence today. We thank you for this wonderful Rotary Club. We thank you for the fellowship. We thank you for a happy hour and a coffee within 7 days. We thank you for the opportunities for service. Please help to make Rotary Due Days a success. And in addition to working on local problems, keep us mindful of the problems of the world, the floods, the famines, the heat waves, the droughts, the disease. Keep us mindful of widows and children in all that we do. And keep us mindful of the families of Tom Noonan, who lost his wife, and of the family of Ron Ott. Amen. Amen. And now let us repeat the things as Rotarians we think, say, and do. Is it the truth? Is it fair to all concerned? Will it build goodwill and better friendships? Will it be beneficial to all concerned? And let me just add, seats.
Let me welcome Stephanie Sheard to introduce our guests and prospective members.
Good afternoon. I'm very excited to announce our guests and prospective members and visiting Rotarians today. After I mention your name, please rise so we can give you a warm welcome from Club 17. Bijal Shah from Huntington Bank. She is with Rotarian Josh Vogel. Pat Raverty, and Pat is with Rotarian Jack Scott today. He is from Thomas More University, and fun fact, he's also from the Florence Club as well, so he is visiting from there. We've got Arohi Shah. She is from UC Rotaract. I'm not sure if she's, there she is, okay, yeah. She is from UC Rotaract. Wonderful, and guest of Tony Archery. Welcome. and Alexia Archery, and she is UC Rotaract president, and she is visiting guest of Tony Otry as well. Welcome and thank you today.
Thank you, Stephanie. Now I'd like to welcome past President Jack Scott to introduce a new member. Welcome.
Thank you, President Steve. Good afternoon, Rotarians and guests. Today it is my pleasure to introduce to our club my fellow employee owner and also my very dear friend, Josh Vogel. Josh is a lifelong Northern Kentucky native. He attended Silver Grove High School, where he has the distinction of playing on all of the sports teams for 4 years. And as Paul Harvey would say, now for the rest of the story. Silver Grove High School was disbanded recently. It was, at the time, the smallest high school in Kentucky. And it only offered 3 sports: basketball, golf, and baseball. Still, this is quite an accomplishment. Josh chose to stay local upon graduation and attended Thomas More University, where he received his BA in environmental science. Josh joined the environmental consulting field and then actually joined Terracon a little over 6 years ago. He's currently the hazardous waste materials group manager for Terracon. He holds asbestos certifications as a designer, an inspector, a management planner, and a supervisor. He's also a certified diver. Josh is a trustee for the Building Environmental Council of Ohio. He's also the secretary of the Alpha Delta Gamma Alumni Board of Directors and spearheads a golf outing annually, which raises about $15,000 to honor a friend and a fallen soldier. Josh is married to his wife, Erin. They live in Southgate, and they have a daughter, 1.5-year-old daughter, Larkin. Josh's wife actually is a staff attorney with Judge Wiesty over there. Josh enjoys all sports, but more than anything else, he loves to be with family and friends, and he loves to serve. He's gotten off to quite a start. Many of you have seen him pretty much every week, more than you've seen me, actually. So I'm not proud of that, but I'm proud of him. He has already joined the Membership Development Committee. He served as a greeter. He's volunteered for Split the Pot. He's played euchre and yielded to King Steve. As a runner-up, he's visited another Rotary club during a week when he couldn't make it here. He felt bad that he was missing it. And actually sent me an email the week of the 4th of July. And in closing, he said, I really miss having Rotary this week. I thought, this is pretty good. He did visit another club, as I mentioned, but today he brought with him 2 guests, a prospective member, Bijal Shah, and also our mutual friend, Pat Raverty, who is from the Florence Club. Considering all he's done to date, I expect even bigger accomplishments lie ahead for Josh. Please take a minute to meet Josh. Thank you.
Always very exciting to welcome a new member. I met Josh for the first time at Rotary Euchre, and he became my new best friend when he said, with the utmost confidence, I'm going to go this one alone. And he scored us 4 points right off the bat. So, this is going to be great. Now I'd like to invite past President Michael Schatzman to tell us all about the next neighborhood coffee, followed by an update about Rotary bowling from Gary Kindell.
Thank you, President Steve. Pop quiz. Let's see what you guys retained from last week. Good afternoon.
Good afternoon.
There we go. Okay, you passed. Okay, so I am here to talk about the Action Auction. It's this Saturday from 5 to 9. Rotarians will be manning the phones, and our very own Wally Emmerling Award winner, Richard Lajeunesse, will be our auctioneer, he will once again be selling wine. Again, not only before it's time, but it'll be a bit early, bit often kind of a night. Okay, so once you get through the Action Auction, then on Tuesday, we have our neighborhood coffee. I think everybody got an email on this earlier today, right? So it's next Tuesday, Fulton Yards. It's right next door to Eli's Barbecue, the big blue building. You can't miss it. From 8 a.m. until 10 a.m. And we'll have fun and frivolity and just hang out and get to know each other in a different kind of situation. So I've had several people RSVP already, and we're looking forward to seeing everybody there. Thank you.
Hello. Fall's upon us, and that brings your fall allergies and me in the podium. But I do have an exciting announcement. Bowling begins next week with practice. We'll start at 7 o'clock at Stone Lanes in Norwood. You know, if you ever thought about bowling or just want to see what it's all about, stop in, and we will be practicing. The league will start on September 21st. Rotary Bowling is one of the longest standing committees in Rotary. We've been around nearly 60 years. We've had our tournament against Dayton for over 50 years. And it's really a great way to get to know, for new Rotarians to get to know people, for established Rotarians to get to know more people. There's 23 other Rotarians that are there every Wednesday night. And there's really no excuse. You know, I've heard, oh, I can't bowl. I haven't bowled in 30 years. But the people with the worst averages, we have 100% handicap, so you can actually help your team more than the person with a 180 average. And we have like 2 of those, so it's not too intimidating. If you don't have a ball or don't have shoes, they're available at the lanes. So we'd like to see you. We still have 2 slots left. I'll be around afterwards. And if you have any questions, Ed Mathis is one of our enthusiastic bowlers, been bowling with us for a couple years. Jeff Weir, Hux Miller, or myself. So thank you.
Thank you, Gary. Thank you, Michael. Rotary is not just a Thursday lunch meeting, and thank you for making Rotary have a full week of activities. Announcements. Several announcements today. First of all, our meeting sponsor is Genoa Asset Management. Thank you, Peter Baden, for sponsoring this meeting and supporting our club and supporting membership development. Birthdays. We want to wish a happy birthday to Galen Gordon, who was celebrating a birthday on the 6th. Oh, we've got Split the Pot. Peter, did you put a ticket in here? I did. Oh, we can't have. Do you have anybody? All right, I'm going to have to trust the invocation master. You're there. All right, the last 4 digits. 7224. You are pulling for $44. Hey, Sam, all right. Sam, you're drawn for the Queen of Hearts. The revolving pot is up to $499. Oh, Ace of Hearts, close, so close. Thank you for supporting Split the Pot and membership development. You know, Sam, it is appropriate that you just won that because you won back some of the money that you donated to the happy hour on Tuesday. Special thank you to Esteban Calle for putting together a very successful happy hour at Wise Guy Lounge. Once you found Wise Guy Lounge, it was fantastic, right? It was beautiful venue, great bar, and thank you, Sam and Esteban, for helping to sponsor and kick off that monthly event. Cincinnati Rotary Due Days. Cincinnati Rotary Due Days inaugural service days for 2022 is seeking Rotarian volunteers. Our service days will be Friday, October 21st and Saturday, October 22nd. We'll include 20 volunteer projects helping 17 nonprofits. Please see the weekly e-raise to view the projects and sign up. The sign-ups are open to Rotarians through September 15th, after which they will then open them up to a broader pool of community volunteers. So we've got a narrow window here. If you'd like to volunteer and be a part of Rotary Due Days as a volunteer, you've got about a week to get to click the link and to sign up. Susan Wilkinson or Owen Raspin if you have questions. Rotary After Hours is coming back. Our next Rotary After Hours is hosted by Rotarian Kelly Mahan on Friday, September 23rd. So the hits keep coming in the month of September. September 23rd will be a Rotary After Hours at her home from 5:30 to 7:30. She lives at Graydon Meadow Lane. The address will be in the e-raise. Attendees should bring a beverage of choice and an appetizer or dessert to share. RSVP to Kelly Mahan by Monday, September 19th. So Friday, September 23rd is the event. RSVP by Monday the 19th. Family of Rotary. It is with a heavy heart that we announce that longtime Rotarian Ron Ott passed away Saturday night in his sleep. Ron became a Rotarian on June 9th, 1988, and was club president for Rotary year 2005 to 2006. Ron recently lost his wife, Lynn, just this past December. Please keep his family in your thoughts and prayers. Visitation will be at 10 a.m. until noon at the time where the service will begin on Monday, September 12th. Church of the Savior, United Methodist Church on Pfeiffer Road in Montgomery, Ohio. And as Dr. Hux mentioned earlier, in more sad news, Tom Noonan shared this morning that his wife, Pat Noonan, died unexpectedly last night at St. Elizabeth Hospital in Edgewood, Kentucky. Cause of death was heart failure. Funeral arrangements are still pending. Please keep Tom and Pat and their family in your thoughts and prayers as well. In happier news, the Cincinnati USA Regional Chamber unveiled the participants of its Leadership Cincinnati Class 46. Those selected will be a part of a months-long course designed to boost their leadership skill and further engage them with the community. And we have a nominee or an awardee in this club. Please congratulate Rotarian Allie Hubbard, Vice President of Strategy and Business for the HGC Group of Companies. Well deserved, Allie. Well deserved. In further good news, Rotarian Wes Botto is excited to announce that he has partnered with Mike Yanucci to create Hillcrest Financial Group. Hillcrest Financial Group is part of the Commonwealth Financial Network. Congratulations, Wes, on this big step. All right, moving on to our program, Mr. Baden. Pete Baden is no stranger to this club. Pete and I think we joined Rotary Club 17 about the same time, about 15, 16 years ago. And over those years, Pete, you have worked on many, many projects. And I know we have worked on many of them together, and as I'm sure many of you have. I remember a successful one. I think it was a fin and feather event that involved a lot of kids and a lot of fishing poles. I think you might have personally secured all the JTM burgers we were going to need for about the next 6 months from the homeless shelter. Was very appreciative. But yes, our Rotary youth leadership selection interviews, Condon school parties. But it was with Youth Exchange that Pete and I worked most closely together. Pete and his wife Carol, they hosted a Rotary Youth Exchange student for Club 17 a few years back. Nathan, I believe, for the whole year he lived with the Badens. And it had such a profound influence on Pete and Carol and their son Andy that Andy went on to become an outbound youth exchange student for Rotary and went to Germany for a year. Professionally, Pete is a bond guru. No one knows as much about fixed income and bonds or is as excited about fixed income as bonds as Pete Baden. He's always been a consummate student of the industry, and when I needed insight about bonds and what's going on with interest rates, no one was more enthusiastically willing to talk and to share his insights than Pete, and I've always appreciated his counsel. That's why I was especially intrigued when Pete said that he was working on something new and something innovative and something that was going to really change the industry. But he said, I can't tell you about it. And of course, he's telling me this while he's playing cornhole at one of the Rotary, one of our Rotary, I guess it was one of our away games, right? We were down at that Reds firehouse maybe 6 months ago. So here we are just a few months later, and Pete has a lot to talk about and a lot to celebrate, and we're looking forward to learning all about it. He is the co-founder of the U.S. Benchmark Series and co-portfolio manager of the Benchmark Series funds. In addition, Pete is the chief investment officer and portfolio manager of Genoa Asset Management, a subsidiary of FM Investments, managing over $600 million in taxable and tax-exempt bonds. Pete earned his bachelor degree in business administration and finance from the University of Cincinnati and is a CFA charter holder. Peter and Carol live downtown and have 3 adult sons and 3 grandchildren. Let's put our hands together and welcome our very own Peter Baden.
First off, I have to remind myself I'm not as tall as Steve. And first up, I really want to thank Steve and the Rotary Club for having me. I've been a Rotarian for 15 years. I've always been out there or up here making a quick announcement and sitting down. Never actually thought I'd get up here and speak to this august group, and it really is an honor. So thank you for having me. I know, geez, I'm just a Rotarian. No, it's really an honor. You guys are awesome, and I mean that from, you guys are some of my best friends, Jack and Eric and so many different people in this, and of course Ron Ott will always hold a special place in my heart. So thanks everybody for being so awesome and being there for me, my family, my business. And a lot of this happens because you guys were there and reminding me the 4-way test does matter, and it's in this product. You'll see it. It's so simple, so straightforward, and so helpful to so many people. And they're like, you're gonna make money on this? I'm like, I don't care. The market needs this, people need this. And that's why we built it, and that's why it's there. So I hope you get something out of this. It also has a little something with Steve, and then we'll have some fun at the end. Let's see, Steve, I hit the green button?
You do.
Okay, let's try this. So what did we do? We did a NASDAQ listing of what's called an exchange-traded fund. You're gonna say, what the heck is an exchange-traded fund? Everybody knows what a mutual fund is. You put some money in, somebody manages it for you, it's all wonderful. So we took that to the next level in the industry, and we created what was called an exchange-traded fund. It's a mutual fund that you can trade in and out of on a daily basis, and there are market makers on the stock exchange to make markets in the shares of the mutual fund. You're going to say, why in the heck would you want to do that? This is actually a really good thing for people in the mutual fund, and I can go into that for a long time. You think I'm a bond geek? Wait till you find out I'm a fund geek too. But it's a good thing, and it also allows us to do something really clever. We created 3 different exchange-traded funds to hold only one bond. And you're like, what? Why would somebody want to own a mutual fund around a bond? Well, that bond is a benchmark U.S. Treasury. So when you look on, let's say you happen to be totally bored or your TV's broken and you have CNBC on the screen, and you look and there's tickers that come up every 30 seconds or so. And there's the S&P 500. 20 years ago, you couldn't buy that. You had to go buy all 500 stocks. Now you can just buy the SPY or the IVV, and you can buy it all in one fell swoop. Then came GLD. Wow, I can buy gold. I don't have to go down to some pawnbroker. I can just buy GLD, and I own gold. That's really cool. And oh, by the way, it wasn't a 30% commission. Then it came around to, okay, I can turn around and buy oil. Wait a minute, I can buy oil. So the next ticker comes up, and I'm looking at it, and up comes the yield on the 10-year Treasury, and you can't buy that. Sure, John can buy it. He knows how to pick up a QSIP. He knows that bonds come in $1,000 minimums with $1,000 increments, and price is a percentage of par value plus accrued interest. Everybody get that? Yeah. Now you can just go and you can type in U10. I want to buy 10 shares at roughly $50 a share, and you can have $500 of the benchmark U.S. Treasury. And when you see it go up, you go, oh, shoot. And when you see the yield go down, you go, yay, because bonds and yields, prices and yields go inversely to each other. But for a lot of folks, and I know John can buy bonds, but a lot of folks in the investment industry can't buy an individual bond for their clients. They can only buy other portfolios of bonds offered by other ETF providers or mutual funds, or they hire somebody like me. That's the other side of my business is I manage individual bond portfolios for people. And so this allows you to first buy a very safe investment. And by the way, I found out I can say safe because FINRA says it's safe. It's good for wartime, good for recessions, things like that. Hold it in your portfolio and have a great diversifier that will go away from stocks. What does that mean? Well, Steve and I were talking about this several years ago. How long ago? We looked a lot younger, let's put it that way. It was way before I had any silver in my hair, let me just say that. And I went through some things, and I went through some changes, and let's just say in the middle of COVID, Ross Sinclair kind of blew up. So I was with Ross Sinclair for about 15 years, and it blew up, and it split up into 2 different companies, or I split up my business into 2 different companies. So what I deal with when I talk to individuals is Crew Capital, and that's why you see Crew Capital on my sheet here. Pete, does that answer your question? Then I have the money management arm, where they don't want any individual investors. They just wanted my money management business. And I said, okay, fine, we'll split this. So I have the Genoa Asset Management arm that is with another company out of Washington, D.C., that I manage money on all the platforms and things like that, including doing this ETF. You're like, how the heck can you do that? It's legit, and I'm registered for both, and we're all friends, and we're all getting along great doing it, and I have a lot of help to do it. But that's how come I'm split into 2 different companies. So the top company there, the Genoa Asset Management, is the one that's doing this and did the exchange-traded fund. What in the heck are we talking about here? So what Steve and I were talking about is, you have stocks and you have bonds in a portfolio, and you might have some other things, real estate, you might have some other things, but let's just talk about stocks and bonds. What we were looking at was we wanted to put a layer in between the 2 that would be for liquidity. In other words, something that would be liquid that you could sell at bad times of the market. Maybe it would even go up when stocks won't go down, something like that. And Steve said, I've thought about this, and I thought about using this thing called the TLT. And this is the the long-dated treasuries that are out there. And this is a product that's offered by BlackRock. They're a great firm. They have this division called iShares. And this is a great fund. It holds all the treasuries that are out there really, really long, including about 12% of it is a 29-year treasury, which I'm trying to remember what happened about 29 years ago, that they would have so much treasuries issued. Oh, wait, the pandemic. So that's how that came about. I was like, this is great, but around Christmas time, I'm looking forward in the market. And I said, I need something like this, but I don't want a bunch of long bonds because interest rates are going to go up. What I really wanted was something that was even better liquidity, because I didn't want to own a portfolio of bonds. I wanted to own the benchmark, and I wanted to own something around the 10-year. So I'm looking at it, and I'm like, why would I want to do that? So if you look at this chart, I know there's a bunch of lines on this chart. I apologize. This is the last techie thing. The blue line is the TLT. The green line is the S&P 500. Do you notice at the beginning of that chart how they move in opposite directions? Okay, it's awesome. See, my bonds went up while my stocks went down. I made money on that. I can turn around, sell some bonds, buy some more stocks. Great idea. Until we get to this year, and then they did what I call the stocks started following the bonds. Some say they're positively correlated. I say, no, the stocks followed the bonds. And everybody went to heck in a handbasket. And this is what I saw coming, but I wanted something that was not quite like the TLT, and I didn't want something that was there. So this is where the concept came up of, I just want the benchmark treasury. It's the most liquid instrument out there. I can get in, I can get out. I had a conversation with a market maker as we were doing this, and I said, they want to see some liquidity, they want to see some assets in the fund, they want to see, volume in the shares. And he looked at me and said, no, you don't understand. You own one bond. That's the world's most liquid fixed income investment. If somebody calls me up as a market maker and says, I want $1 billion of this fund, I'm going to turn around and buy $1 billion of the U.S. Treasury. Happens every day. I called somebody up. I said, can I buy $1 billion at 3:30 in the afternoon? Yes. Okay. And I'm going to hand that to you, and you're going to have $1 billion in your fund, and they're going to have their thing. And if they call me the next day and say, I want $1 billion out, I'm going to turn around and get that $10 billion of Treasury from you, turn around and sell it, and give them their money. He says, it's the world's most liquid investment. So it's extremely cool in liquidity, extremely nice that it doesn't have this really long distance, but it is negatively correlated, as we just saw back in June. So what is really cool about this? It's easy to buy, it's easy to own, it's always on the run. Okay, these are all great ideas. It pays monthly dividends instead of every 6 months. You can get in, get out. You just remember a couple of tickers. And everybody's like, okay, but it's just a bond. And it's like, yeah, but now you can buy it. Now, the other really cool thing on this, and I'm sorry it took me a while since I did this because I've had a lot go on in the last 2 days, and I got up at 2 o'clock this morning, is, here we go. It's the first single bond ETF. It's the first fund to follow the benchmark bonds. It's also the first time that folks can short the benchmark bonds. Well, what does that mean? It means like you don't like a stock, you think it's going to go down, you could turn around and short the stock. Well, now you can short the 10-year, or you can short the 2-year. Soon we'll have all of the benchmarks, everything from 3 months out to 30 years. I wouldn't recommend shorting the T-bill. It's probably not a great idea because it doesn't really go down. But you can try it. And it's also the first time that we've ever had in the industry that anyone can buy options on the 10-year. What does this mean? It means that you can hedge your interest rate positions. It can do all these other really cool things. Think about it. All the things you could do options on, all the stuff that you hear about in the industries, they could never do options directly on the 10-year until I put this together. So that's what I mean by service above self. I'm not going to make any money on the options. I'm not going to make any money if somebody shorts the stock. But it's there for people to do to hedge their portfolios, manage their portfolios, and use them as a tool. Why did I do this? I wanted something in my portfolio that I could take off some risk off of my portfolios, still manage how much interest rate risk, how long things were, and I wanted that liquidity. But I added all of this in so that people could do this. I mean, I insisted on options, twisted NASDAQ's arms and 3 different options market makers to make that happen so that we have it for the industry. So some of the reviews. Well, these funds hold just one bond. And why are they revolutionary? I didn't say that, Baron said that. It's one of my favorites. Single bond ETF solves some key investing problems. This guy doesn't like anything. He called single stock funds, you read this one, didn't you? He called single stock funds mutant funds because he just hates them. And I can tell you why later, but just say that, I only own two things, the bond and cash. That's it. Let's say single stock funds don't own that. And this is the URL for the website, the tickers, U10, U2, T-bill. And why in the heck am I standing up here? Because to do this, let me give you a little bit of how long this takes and how hard this is. And we did this in record time. So down around Christmas time, as I'm thinking this through and coming up with this idea, and oh, by the way, keep this in the room because I don't want it totally out there. I had COVID at the time. And I'm sitting there trying to figure this out, and my boss calls me up and he says, "What are you working on?" And I said, "Well, I'm looking for the 10-year in an ETF because it would do this, this, and this." And he goes, "Oh, it's got to be out there." And he looks around and says, "It's not out there." And my boss, being my boss, the one in Washington that is, goes, "Well, let's build it." And I said, "Okay." So from that point forward, I tried to take a vacation in May. That didn't happen. We had spent the entire vacation, my wife texting me from the beach, a month of May, texting me from the beach, my boss texting me from Washington, and me on the computer trying to rewrite a 300-page prospectus. And so that's not the amazing thing. Everybody's like, "You got that done in an incredible time." It took the lawyers 2 months to get me a blank prospectus that wasn't even, it was based on stocks. I'm like, really? So I'm like borrowing stuff from, prospectuses, and that prospectus is the legal document you have to file with the SEC so that you can file an exchange-traded fund. They've got all, you're used to reading these things. You're a lawyer, so sorry about abusing the lawyers, but so then they come back and they say, "Your prospectus is beautiful," and I wrote it all out so that it's all of them in one thing, and they said, "That's great, but we want you to break them out into each individual one." So I had 10 of them listed in one prospectus. They wanted to take it from one prospectus to 10 prospectuses. And this amazing thing happened. My boss calls me up and he says, "Okay," and my boss is Alexander Morris, and the man is truly a genius. And he says, "I'm getting on a plane for LA. I'm going to land in Denver. By the time I get off the plane in Denver, I should have this done." 4 hours. 4 hours later, I get an email in my inbox. It's done. I only had to make some edits, and that was it. I mean, just some minor stuff that he missed. That would have probably taken 6 months to a year if I had had the lawyers do it. And the guy did it in 4 hours. I don't think I could have done it in 2 weeks of just solid heads down. So that, between that and, working through a vacation and everything else, other firms usually take somewhere around 2 to 3 years to put one of these things together. We've never done one before. They're like, "You're a first-time issuer. We've never heard of anybody being able to do this." Wonderful partners. I told Ali, and I'm going to say it again, U.S. Bank is the best. They've got some of the best people. They know how to do it. And we're working with a lot of other great industry partners to make this happen. Got to say good things about my market makers that made this happen. Jane Street, amazing. You're wondering who the heck is a market maker? They're wonderful people. They're like behind the curtain. Every time you trade a stock, you're not actually buying it from another, you're buying it from a market maker. And they really work hard to make this happen. And Jane Street has drank the Kool-Aid on this concept, and they've promised me that the spreads will always be tight, and you'll always get a great price on this, and it'll always be, I want to get it as tight, if not better, than buying the actual 10-year itself, and they do too. So, they're amazing, and they've drank the Kool-Aid on this whole concept. But if you're interested, there's the website. Anybody can do this. Any RIA folks in this place that wants to do this, please call me. I'd love to chat with you about how I think we could use these in portfolios. I'm always listening to other folks, how they could use it in portfolios. And it wasn't meant to be totally an advertisement, but there is an RIA who did buy and drink the Kool-Aid with me. And so we got to go up onto the stage, and we put a rotary wheel together. We have a better version of this picture. So we're going to post this of where the Rotarians have gone, because we got to go up onto the stage together and ring the closing bell at NASDAQ. And so to bring this all around is, why is this a Rotary story without Steve? And why did I go to Steve to talk about this? And I did talk to Eric and some other Rotarians. Eric didn't have as much interest as Steve did, so Steve got to second base. Eric was like on the phone, driving to his car to do something with the kids. He's like, yeah, whatever. Yeah, it sounds like a good idea. Click. Okay, I get it. Okay. Steve, on the other hand, puts me in front of his investment committee, and then he starts to drink did you not see his eyes light up? I mean, he starts to drink the Kool-Aid. He's like, holy cow, no, you don't, this solves so many problems for me. And so Steve was one of the foundational investors, and really the combination of that really made it happen. And so we had a very happy closing bell yesterday, which looks something like, oh, there's a good picture. All right. Yay. And there we are. So there's Steve in the back. Can you see him? And then I'm up front. The gentleman in the red tie is Alex Morris, and the one next to him is David Littleton. They're two of the partners, and there's Kimberly, and then there's Matt there, Kimberly Levon, and Matt, I don't think of Matt's last name, another time when I'm not up at 2 o'clock in the morning. And they're all partners in the firm, and me. So that's my story, and I'll change it if I need to. Let me make sure I'm done. Oh, wait. They made me write all these. Everybody, can you please read this, please? There's another page for you. There's a test later. Got that? All right, good news. Okay. Any questions? I'm open for questions. How'd I do? Yeah, Pete.
So it says that it pays interest monthly?
Yes.
So what's the yield on this thing right now?
If you look at it right now and look at the instruments that are in there, so my expenses are the same as all my competitors, 15 basis points. So if you go out and look, I think the 3-month is where about 3% or so. Take off 0.15 from that, so you're about making 2.85% on T-bill. 2-year is, where's that, 4% or so? A little bit lower? Give me an idea, huh? 3.5%, so you're making a 3.35%. Just hold it for the year. It will go up and down with the market, and I'm going to roll it every month to the new 2-year. So as rates go up, your coupon's going to go up and your yield will go up. And as rates come down, your duration's going to still stay long, and you're going to benefit from that. And 10-year is 3.35, something like that.
So with the Federal Reserve looking at raising interest rates another 0.75% next week, 2 weeks, what effect is that going to have on risk in your forecast?
Eric, you want to take this question? The Federal Reserve is going to announce something in a couple of weeks. They may announce an interest rate increase. They haven't said that they won't, and they haven't said exactly what it will be. And I like to speak in certainties. What I do know is the market, if you look at the probabilities that are out there from the CME group, they're expecting the Federal Reserve rate to go up by 0.75% at the next meeting. They're also expecting it to go up another couple times until we get to year end and then top out around 4%. Okay? That's where it is right now. I haven't looked at it since I got back from New York, but last time I looked, that's where it's at. What does that mean for interest rates? Well, there's 4 different scenarios I see happening here. First scenario is the Fed's successful. They managed to go ahead and slay the inflation dragon, and then you're going to start seeing interest rates come back down. Second scenario is the Fed's so successful they cause a recession, or they cause a recession, and you're going to start seeing interest rates come back down. The third scenario is fear is going to ramp up, war, what have you, volatility kicks up, and you're going to start seeing interest rates come back down. Why? The bonds, specifically the 10-year, are the traditional safe haven. So when bad times start coming, the 10-year goes down in yield and goes up in price. Those are 3 scenarios that can happen. The fourth scenario is we go back to 1970s, inflation keeps going, the Fed keeps raising, things go out of hand, and then, it looks ugly. Where can you be? So each of the products have different interest rate risk in them. Let's go from the most risky, which would be the 10-year. The 10-year will move quite a bit if it goes up in yield, you're going to see some real volatility in your price. It's a lot. What is it, about 7-year duration right now, Eric? So about 7% for every 1% move in interest rates. So that means if it goes from 3.30 right now to 4.30, you're going to lose 7% on the 10-year. That's a bad thing. 2-year is different. It's much shorter. So if that moves up by 1%, you're going to lose 1.75%, depending upon what the duration is right now. The T-bill is unbelievably stable. I mean, I've been looking at the index and everything else. Your interest rate risk on that is about 0.23%, and the yield on it right now is, again, close to 3%. And so, needless to say, we've had our most interest in T-bill. That we started with $20 million. Okay, let me talk to you how to start an ETF. You talk to these wonderful market makers by the name of Jane Street, and you say, I'm the greatest guy since sliced bread. Would you give me $20 million in cash to manage? And they say, are you kidding? Nobody gets $20 million. And then you get them to drink the Kool-Aid, and they say, okay, you get $20 million, and nobody in the industry believes we got that. And then we got another group to come in and give us another $20 million for T-bill. So I got $20 million in seed for 10 and $20 million in seed for T-bill. The 10-year is still sitting on about $20 million worth of seed, and I'm working on that. So I'm not talking 10 years why it's happening. I've got charts. I've got lots of other reasons. T-bill had $20 million in seed, and it's trading very well, and we're very pleased with how that's working out for that in particular investor. And we're talking to him about seeding some of the other rounds now. So going out, we've got 6 months, 1 year, and maybe the 30-year. A lot of people want the 30-year right now. John, do you know why somebody would want the 30-year right now? Did I not mention that there's 3 scenarios that interest rates go back down? Yeah, see? Okay, I'm a 5-star rated money manager from Morningstar. I've been managing money for 15-some years now, and everybody goes, how do you keep doing this? Because I go against the grain. I don't know that interest rates are going to go up or down, so I go and I take my positions here and I take my positions here. Overall, we average out. So why do you want to go long? Potentially could lose money. Because you got plenty of short. What if interest rates come back down? Well, that T-bill goes from 3% down to 2%. Your yield goes down to 1%, and all of a sudden the Fed's going, we're going back to 0 interest rates again. And you're going, oh, okay, I'll buy the 10-year now. Well, at that point, the 10-year is now at 1, or even back to 0.75%. So if you buy the 10-year now, yeah, you might lose some money, but you're hedging the fact that this thing goes down here, because if the 10-year goes from 3.3 to 1, you're going to get a really nice gain. So it's not all of it. It's all a balancing act. Little bits of here, lots of this. I've got inflation protection. I've got variable rates. I got a lot of different things. And the piece I wanted out of this the mostly was the liquidity. I want to be able to get out. Even this summer, you guys didn't think that was all that bad this summer, so it was a pandemic. It was terrible trying to trade anything from a stock to a bond. I mean, just try to find a bid and get somebody to take something off your hands. You got to sell something that you really like to go buy something that you like better. How about selling this and go into something that you like a lot? So, next question. I'm sorry. Oh, come on. I'm an open book.
How does the options on the bonds, does it work to stabilize this at all, or is it? I mean,
That's an interesting question.
Rates are going up.
Well, they're not well known yet. I mean, we've got a pretty good megaphone. We've had over 20 articles written on them because we are the first single bond ETF, and most of it's been very positive. So, but that means that was 20 articles that were written while everybody was on vacation. So we're getting there. We've got some more press. I'm going back to New York next week, and the next week, and the next week, to get the word out on these. That's what people are hoping. The most recent article we had, that one that said we were a critical part of the financial infrastructure, is hoping for just that. That our options, our ability to short or the ability to go long in these particular ETFs will bring that additional liquidity. From up until this point, you had to be a pretty serious broker to be able to do a lot of the things that you can do with this ETF. Now the meme stock group can do this if they want to, or just about anybody. So it really brings in a whole new ability of folks to be able to manage their own interest rate risk. I mean, I even envision somebody wants to lock in on a mortgage rate, and they can do this cheaply by turning around and buying a put on the 10-year. Okay, I think interest rates are going to go up. I can turn around and buy a put. A put is, if the stock price goes down, you benefit from owning the put. Well, if interest rates go up, stock price goes down, I benefit from owning the put. I can hedge my rate risk on buying a house by this instrument that I created. So will everybody understand that eventually? You know, right now the options are not there yet because the stock needs to season a little bit. But like I said on an interview yesterday, yes, I was interviewed yesterday. I don't think I did great. I thought I blinked too much. I don't blink much, do I? But like I said yesterday, if you called up a market maker, gave them a bid, and you may get the trade done. I mean, they'll work with you to try to come up with what the price should be given what's going on in this. So the options market will pick up, and people will start using that to hedge their portfolios better. I don't just cover bonds, I cover stocks, I cover the economy. Come on, you had to have some long, fast idea of what in the world are we doing? Okay, Sam.
So, since you've launched the,
I'll be there.
Are you able to tell how much funding has come into these ETFs?
Yes.
Give you the next one.
No, I can get how should I say this? I don't know who's buying it. It's completely anonymous unless somebody sends me an email. Because we've seen volume and all of a sudden I get an email, oh, it's this person. But we can see, so this is a really interesting thing. What's the difference between an exchange traded fund and a mutual fund? When you go to the mutual fund and you give them $100, it goes directly into the fund. They go turn around and buy the securities they need to go into the fund. If you give them $100 million, all of a sudden that poor fund is trying to deal with the fact that they got to go turn around and buy at the ask side. So they got to buy everything at the higher price, and it's then going to get turned around and marked down to the lower price. With an ETF, you may come up and say, okay, I want 2 shares. That's not going to create a share with me. I don't see that. So my fund is still going forward. The market makers will continue to keep building up until they get enough shares to turn around and do what they call a creation unit and give that to me. And what they do is they actually just give me the 10-year or the 2-year, whichever one it is. So I don't actually turn around and get the money and go out and buy it at the ask. I just get the security at the bid price, and it's better for the people who are in the fund already because they're not having to go and get all this money coming in and buying at the higher price. They already get it at the lowest price. And if somebody hands me cash, which I give them that option, I actually charge them for that so that I can go and buy it in the market and not have to suffer the shareholders that are in there. So the ETF is a better creation, and then it allows you to do all these other really cool stuff too. All right, well, folks, if you have any questions or anything like that, I didn't mean to turn it into a commercial, but I thought you'd be interested in it, and it's, I'm obviously geeked out. Oh.
Just to clarify, I see you had a CBOE affiliation. Does that mean that I can buy a put on your fund?
Yes.
Okay.
Please. But do me a favor, don't put a market order in.
Okay.
Okay? Put a limit order in.
I will. I know how to do it.
Okay, cool. And no, it's not on the CBOE. It's on one of NASDAQ's exchanges, but it doesn't matter. All right. John, catch my good side, will you? All right, folks. Thanks, everybody, again.
Peter, thank you for your presentation today, and thank you for the innovation that you're bringing to our industry. Yeah, I do have a lot of clients who will complain about the interest rate they're getting on their money market funds or their CDs or their bank deposits, and the prospect of getting 2.85% is pretty darn attractive. And money market rates are paying sometimes less than 1. So it's a great time to be pushing the industry and pushing more yield and safety for investors. It's really about time, honestly. Let's see. I wanted to share that it was a special treat to be invited to join the NASDAQ yesterday. It was certainly the first and only time I've ever been invited to New York to close the bell. So we thought that we might recreate that here.
You have any announcements?
Well, I do. But first, I'll share the announcements. So we might end the meeting with a little closing bell ceremony. I did want to thank you for your presentation today and for really just being a fantastic member of this club. And you know what this coin means, right? You know
Absolutely.
what the four-way test means, and I really appreciate you living by the four-way test. And of course, you also know that we are trying to end polio, and that in honor of your presentation, we're going to make a donation to that End Polio Now campaign. You know, we've seen polio in the news, it's coming back, and it's now more important than ever for us to redouble these efforts and rid the planet of this dreaded disease. So let's give him one more hearty round of applause. And I do have a couple of announcements before we do our closing bell ceremony. Hands-on Service is meeting in Boardroom 4 on the mezzanine, and the Board of Directors are meeting in the Julep Room immediately following this meeting. You know, next week we have Bobby Spann, the Vice President of External Affairs from the Cincinnati Northern Kentucky International Airport. So that'll be a fascinating meeting. But you know, when we were in the waiting room yesterday for, the closing bell ceremonies, there were about 50 people there, and we're taking a few pictures, and, we're getting ready, and there's a whole team of people that are preparing us for how we should react for the closing bell ceremonies. You don't want a bunch of finance and accounting guys just standing there, trying to look happy. They're coaching us on how to look happy, like raise your eyebrows, make sure you're clapping. So we thought we'll do something similar. We'll close out our Rotary meeting with a little closing bell ceremony. Now, Peter, what do you remember the coaching that we were getting yesterday?
Well, first off, we have to get everybody to stand up.
Oh, all right. So we're going to have to stand up. All right. First, we'll stand up.
All right. We're gonna practice this now. Everybody, let's get a little clapping going. All right. Now give me a woohoo. Come on, let's go. Woo-hoo. Oh, come on. Let's hear a cheer. Come on, let's go. Cheer. Woo. All right, good. Okay. So what's gonna happen here? All right, you good? We're gonna count down. We're gonna see it up. No, it's not on the screen. She actually goes, we're gonna see it on the screen. So here's CNBC, here's Bloomberg, I never knew to catch that other network. And all the networks up there, you get live feeds, and then a countdown clock. So we're gonna imagine a countdown clock up here. We're all gonna go 10, 9, 8, and then when we get there, we're all gonna be clapping and everything else, and then when it comes time we get to 1, we're gonna go crazy. A real quick story. How do you get confetti at NASDAQ? Because everybody else's confetti is fake. Ask for a glitter bomb. They're like, oh my God, no, we can't clean it up. Okay, you get confetti. So we have real live NASDAQ confetti right here. All right, so here we go. All right, everybody start clapping. Good, come on, give me some enthusiasm. Come on, let's go, all right. 10, 9, count with me, 8, 7, 6, 5, 4, 3, 2, 1. Congratulations, folks, you just closed the Rotary.
Thank you, Peter. Meeting adjourned.